Morning and welcome, Patriot News Hour. Joe and Jason on this hump day. Happy Wednesday to everybody out there. Our toll-free number, 800-951-0592. The website at allamericangold.com. And, you know, it's been the year of chaos, living up to its name. Absolutely, the election drawing closer. We got baseball players, the Diamondbacks looking their best to blow it. We got football season in full effect and all of the distractions, right? This is kind of every 4 years when you get the election. This is prime distraction now. So now you got the baseball playoffs getting ready to start, college football, pro football, and, of course, the elections. But none of it's going to matter. We got a great show lined up for you. Remember, tomorrow, the inflation data. What's it going to look like? We'll also get inflation data again on Friday, but tomorrow will be the consumer, which is the CPI. That's the one they care about the most. We are anticipating another softer type number coming tomorrow, and we're seeing this market react. Anything that is perceived to be bad news, they want to already. I saw it again today. Headlines about more people talking about another 50 basis point rate cut. We've got gold hitting another all-time record high. Matter of fact, TV gold just below $2,700. I think it was $2,695 has been so far the high today. But Jason, it just looks like when you get past the distractions, and we've been warning everybody about next year and the effects of all of the debts. Now we're starting to get, are we getting ready? Is the United States possibly looking at more downgrades from the big guys out there? You know, Moody's, S&P, Fitch. Moody's today, we're going to talk about it in the next segment. Moody's warning, hey, you know what? Kind of what we've been saying. Doesn't really matter whether it's Trump or Harris. The United States fiscal profile. I like how they like the fiscal profile. Yeah, it's going to become much weaker no matter who the next president is going to be. Today we did have one piece of economic data out. New home sales. This was an August number. So rates were already falling because, you know, and again, we know how they like to front run, right? They want to tell Wall Street what to do. A little bit of a surprise. New home sales fell almost 5% in August. They were hoping for a little better. New home sales still up year over year, so that's a positive. But down to 716,000 on a month over month. Better than what we saw in existing home sales. But, Jason, a little bit of a shocker rate. They're uncertain. Hey, how low will rates have to go for housing to make a comeback? And I think that remains to be seen. I don't know if it really is going to matter because prices keep going up.
Yeah, I was looking around yesterday when we were on the air. I was go to Zillow, just check out what's selling, right? Man, there's a lot more red dots on the screen than there was just last year, Joe. There's a lot of people selling, and knowing that our sponsor, James Morgan, he's saying there's not a lot moving. There's a lot more there. It's taken, stuff will sell, but it's taken a long time, and there's a lot of prices dropping. So if dropping rates to get that energized, I guess, again, Joe, they probably will do another 2 half-point drops. I think they do a half-point next meeting and then another half-point in December. And then maybe they go down to a quarter point in January.
It's going to be interesting. I'm still I don't know. right? I don't know. Obviously, I thought it was only going to be a quarter of a point last week, and they gave us 50. Warren Buffett back at it, selling more Bank of America stock. He's down now to 10.5%. Remember, he has to tell. Anytime a major investor has a 10% stake or more, they have to tell you that they've sold, and I think they've got like 72 hours, something like that. Don't quote me and exactly how much time, but they need to tell you that they've done it. He sold another 21.6 million shares. It's not like he's selling, hey, I'm selling 100 shares. No, I'm selling 21.6 million shares. By the way, that brings the total to 218. I don't know how you get a 0.5, but 0.5 million shares that Buffett has sold of B of A stock. So he's getting close to not having to tell us anymore. Down to 10.5%. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Wednesday. A quick look at the markets. The Dow down just under 200 points. Not a lot of data today, right? It really picks up starting tomorrow. The S&P's down 2. The Nasdaq's up 40. The 10-year note still rising, right? 3.78. So getting back. Closer back to that 3.8, probably Moody's scaring the markets a little bit. We'll get to that in a little bit. Gold is down, even though inventories continue to plunge in Cushing, Oklahoma, but gold's up 3. Well, it depends. I think on the TV it's up 8, but 26.60 for gold right now. This would be a new all-time record closing high. Bet as high as 26.70. Silver, man, you got to move fast on these silver deals. Yesterday, we were running those rolls of silver quarters. By the time silver got done yesterday, those quarter rolls, we don't have them anymore, but they were below cost by the time it was done yesterday. Silver was up like $1.50. Maybe at one point I think it was up $1.70. Right now it's down 15 cents, $31.90, but squarely above that 31, which is what we wanted to see. And now we'll start working on 32, 33, 34. Remember, Goldman Sachs telling you the lot of flow into silver, and some news about Mexico taking over a U.S. port. And actually, it's a U.S. Company that they mine limestone, and they control a port there in Mexico where a lot of the silver goes out of. And we'll talk about that story as it develops. But again, we keep telling you, the year of chaos, this was a good year. I know it doesn't feel like a good year, but it was. And when we're going to talk about here with Moodys next, you need to get more diversified, more gold, more silver. I mean, look at what it's doing, and everybody understands the reasons behind it. But check out our friends over at YRefi. Why? Because you get a great fixed rate of return. What does fixed rate mean? It means it doesn't change. Well, what if the stock market does this? What if the stock market craps the bed? What if the Fed, lowers rates 100 basis points? What if they raise it 50 basis points? It doesn't matter. It has no impact on them. Check them out. InvestYRefi.com. Up to 10.25% fixed rates of returns. You can use your existing IRAs. You got too much money in bank accounts or money markets. InvestYRefi.com, 888-YREFI24. That's 888-973-3924. And remember, you got to have a minimum of $50,000. But, Jason, we keep talking about fiscally because there's a difference between Trump and Harris. There is. Right? They have different ideas on taxes. They have different ideas on how to spend money. They've got different ideas about the border, right? They probably got different ideas about foreign policy. I'm sure they do. But here's the thing. Neither one of them is going to be able to stop what we're facing. And today, Moody's, which, by the way, they're the last. They're on credit watch negative. They're the last of the rating agencies to have the U.S. at triple A. Kind of funny that you've got a country that owns a printing press, and rating agencies are like, yeah, you're not triple A. You're not triple A. But they can just keep printing. Well, the reason you're not triple A is because there's a belief that people may not buy it even when you print it. They said the incoming administration, whoever it will be, faces a deteriorating U.S. fiscal outlook. They're talking about declining debt affordability, weakening the U.S. fiscal strength. This is what we're talking about. This is what we talk about with BRICS. Right? No, is the dollar going away? No. They just want less. They just want less of it. In the absence of policy measures that can curb the trends to help limit the debt. So, what are you saying? Wait, we actually got to spend less money? See, that's what Moody's is saying. Not only do we got to spend less money, we got to spend a lot less money. They're saying that the increasing deteriorating of the U.S. fiscal position is weighing on the U.S. sovereign credit profile. So what does that mean? Moody's is essentially telling the world, hey, we're pretty sure we're going to downgrade U.S. debt in 2025. That's kind of what they're alluding to. They're like the Fed in a lot of ways. You know, Jason, they like to tell you ahead of time. Hey, by the way, we're getting ready to downgrade their debt. Listen to what they say, though. The U.S. deficits will run at best 7% of GDP over the next 5 years. 9% of GDP after that, right? Now listen, we got a GDP now approaching $29 trillion, right? So you're starting to, Moody's starting to figure it out. And they're talking about pushing the U.S. debt burden over the next 10 years to levels that will materially weaken the United States' ability to borrow, and increasingly unstable and inconsistent with a triple A rating if no policy actions are taken to change course. And, of course, the government shutdown looks like Speaker Johnson's going to make a maneuver, get the Democrats to vote with him. Here's the funny part. The Republicans wanted some, hey, you got to be a legal citizen to vote thing to be attached to it. They didn't want spending cuts. Right? They didn't want any of that. Now they're going to do a legal maneuver just to pass it the way it is. Jason, and now this is another factor. Right? So when we're talking about gold, we're talking about silver. Why did I raise my forecast for next year? We're going to get way more rate cuts than I thought. First of all, let's start there. I think quantitative easing or tightening, comes to an end. They still got $25 billion. That's going to come to an end. Now today, Moody's is saying, hey, we can't keep doing it. We can't keep giving you the AAA treatment because you guys don't want to do anything to stop the spending, Jason.
What are they graded at now? They're double A, right?
Well, right now, Moody's is the only one that still had them at triple A. The other two, Fitch and S&P, they've got them double A plus. And the funny thing is I've got a feeling that Fitch and S&P are probably going to put the United States on credit watch negative. At the same time, Moody's lowers them to double A plus.
There you go. So if spending truly is what they're concerned about as far as their rating, then it'll all get graded down. I mean, I don't say they can't get around the spending part, Joe, at all right now. There's just the way it's set up currently, unless something is wholesalely changed, right? They will have to do what you're talking about. We'll see, right? We'll see. There's a lot of the times these rating agencies are kind of interesting. I don't even know if any country deserves an A or double A on anything. I mean, when you have such a fraudulent money system, right, Joe? It's right now being pulled apart at the seams. I don't know how you can get a double A plus. I guess if you compare them, it's like the dirty laundry thing. It's the cleanest shirt in the dirty laundry, I guess. I guess that's what America really is.
Well, and again, the shirt gets dirtier by the day. By the way, Bank of America is saying that they don't know why Warren Buffett is selling, but they can't ask him. They can't ask him why he's selling. I don't know. I don't know. Is that true? Maybe that is true. I don't know if they could ask him or not, because that's what I would want to do. If I'm the CEO of Bank of America, I'd be going, hey, what are you doing, right? But here's what they said. It was interesting what they said, that why they think that they're going to be okay. With interest rates falling, we're going to be able to save a lot of money by not paying interest to our depositors. That's what B of A said today. So get ready, everybody, right? You had a few years where you got some interest on your accounts. Jason, Bank of America, I think they know more than what they're letting on. I think they just kind of let the cat out of the bag. Hey, guys, I got a secret. Rates are going a lot lower than you think, because we're going to save a bunch of money because we're not going to have to pay interest to our depositors anymore, Jason. That's got to be like the worst reason why you'd want to invest in. Maybe that's why Buffett's dumping it. Like if that's the only bright spot, no thanks.
Bank of America's got to watch out. I mean, you say if Buffett doesn't have to report once he's below 10% of the stock, right? Is that what you said? So
right. Yep.
That might not be as easy as it sounds. What if the rest of these stockholders are like, well, if he's dumping, we're dumping too? Getting down to that 10% might be a little harder if some other individuals start dumping the same stock, right? What his 10% can go to 20% really quick if a bunch of other people sell, right?
Well, I don't know. Maybe. Whoa, I didn't think. What if B of A starts buying back their stock?
Oh, well, then Buffett will get below his 10% quick.
Keep him above the 10% deal with buybacks. Right. I don't know if they're one. My guess is they want him below 10% as quickly as possible. So I'll quit coming out on the air every week telling you, hey, Buffett sold more stock, right? I'm sure they're like, please hurry up, right? He's only 0.5% away. I think he's got one more week, maybe two. And then he doesn't have to report it anymore, and Bank of America will probably be happy. But I did like their response today. We don't know why he's selling. We can't ask him. But the good news is we're going to save a lot of money by not paying interest to our depositors.
The important question is not why is he selling, right? The important question is, what are you going to buy with that money, Warren? That's the important question, right? That if I could sit down and talk to him right now, I'd say, you know what, you got the record amount of cash in there. What are you going to buy with this? That's the stock tip, right? What's he going to buy? And here's the thing: by the time he buys it, we get lagging data, and he's already bought and it's already gone up. So we won't know until after the fact. But it would be nice to know what he's planning on buying. I'm sure he's got his eyes on something, right, Joe?
Boy, well, he's building a huge war chest, right? That's the other side of it, too. Why is he doing all of this selling? And the answer is he's raising money, right? Because we know what Warren Buffett does. He's the crash buyer guy. He's the guy, he's like, I don't buy any of this crazy crap and derivatives and this and that and the other. Again, I think he's getting ready for 2025. That's what he's doing, right? And to Jason's point, he's probably got a list of the ones he wants to buy, but he's just waiting. We'll be back. 800-951-0592, Patriot Radio News Hour, Joe and Jason on this Wednesday. The latest now, BMO, the latest bank to jump up its gold forecast. But these guys they're pretty lost. They raised their gold price 15% to $2,700, right where it's at now. Raised next year's price target by 21%. Raised their long-term forecast by 15%. But it was very interesting as to why. Now, they said, hey, listen, rate cuts are going to help, right? Kind of what we were talking about. But they said, and this is I think this is the big win for gold. It's clear that gold is being brought back into the monetary system as the trend towards de-dollarization of trade accelerates. So BMO now saying, okay, we get it. The amount of countries wanting to hold dollars is not wanting to hold dollars is growing. The BRICS, we've been talking all week about this BRICS payment system almost every day now, because the meeting is next month. Almost every day now we get new things to learn. Here's what we've learned. The BRICS bridge payment system is fully operational. Trades are occurring in native currencies. It's done through the Bank of International Settlements. We learned that Ethereum was the blockchain behind it. Yesterday, it was announced that the payment system, which bypasses the dollar, right? This is what the system is meant for. Jason, they're saying that there's 159 participants that are ready to adopt this new payment system. So this is much bigger. You know, we talk about, hey, there's 11 countries in BRICS. We talked about there's 34 more countries that are applying for BRICS membership. And now they're saying, hey, there's 159 financial institutions that are ready to adopt this payment system. They've got a clearinghouse set up. And by the way, apparently, they may have their own rating agency independent from the Western giants. So independent from Fitch, independent from S&P, independent from Moody's. So this is continuing to grow here. And once again, they're talking about 40% gold, 60% to a basket of BRICS members and their national currencies as a unit. They're developing kind of like this unit of exchange. And if they're talking about a 40% gold backing, which seems to be, that has been the narrative now for like the last 6 weeks. As this summit gets closer, The narrative has been 40%, and no one's come out to squash it. Like I would expect, like maybe India or China, Russia, somebody to come out and temper that expectation. Jason, that hasn't happened. And for that to be the case, two things need to be true. Number one, boy, those BRIC countries got to buy a lot more gold. And number two, the gold price has got to go a lot higher to get there. You actually need both, right? So obviously the higher the gold price goes, the easier it is to get to 40%. But Jason, price alone won't do it. And I think this is why you're starting to see all of these analysts and these banks are going, okay, wait a minute. These guys are serious. Because all of them are, well, gosh, gold got expensive. They'll stop buying. Right? They'll stop buying. And the answer is, if this is true, this is what they're going with. That's not going to happen. It's not going to happen anytime soon.
Well, and if you have two competing systems going, and there's not a lot of safety being felt on where it's headed, then there's going to be a lot of gold buying no matter what direction it goes, right, Joe? Because if you're trying to de-dollarize, which a lot of these countries are, you're fighting against the system that's in place. The flight to safety has always been gold, right, Joe? So regardless of a gold-backed system or not a gold-backed system, these countries don't know where everything's going to land. I don't think the BRICS nations know exactly where it's going to land. So if you get 50, 100 countries sign up with the BRICS and then the BRICS falls apart, it's just going to create more uncertainty and more buying of gold, whether it's a gold-backed currency in any country or not. So gold-backed, yeah, a lot more gold buying. Not gold-backed, a lot more gold buying, because the uncertainty is why everyone's going into it, Joe.
By the way, it looks like the IMF executive director for Russia may be appointed to kind of be the guy to oversee all of this. So, again, they want credibility. They're using the Bank of International Settlements. Now they're going to get an IMF executive director to kind of run the thing. Jason, a lot of these puzzle pieces seem to be falling into place as we're watching this develop. And note out of BMO today talking about, hey, the real driver here, it's really not interest rates. It's the acceleration of de-dollarization that they see as the longer-term driver for gold.
Well, yeah, it's just what I said, right? Right? The BRICS nations, many of them are de-dollarizing, so that's how many times have you've heard me say, Joe, that if you're getting rid of dollars, there's always one place you can spend it, right? You know, the currency of England isn't the dollar. The currency of Russia isn't the dollar. Our currency right here in this country is the dollar. So there is somewhere to spend it. And I'll tell you right now, if you all those dollars keep coming here, you don't even have to print money. All those dollars being pressed back into this nation to get whatever they can get their hands on, get whatever value they can, is going to cause that. This is why I keep saying inflation is going to get so out of control, because there's going to be ridiculous spending. De-dollarization brings more dollars back here. And then if there's a market that's tanking, they'll start quantitative easing, Joe. So it's the worst situation for inflation.
It's actually exactly. It's actually inflationary, right? Because those dollars do got to come back here. So I don't know. Kind of interesting as this gets closer. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Wednesday as gold continues to climb. We're waiting for tomorrow. I guess the calmer the inflation number, the better. Also, jobless claims. That's going to be another one. Are we going to see a spike in the jobless claims with what's going on with all the strikes out there, right? Because you got Boeing on strike, you got the maids and housekeepers on strike, the longshoremen, right? That's supposed to start next week. Boy, that was terrible news yesterday, wasn't it? They're like, yeah, we're not even talking right now. By the way, Boeing's losing about $150 million a day. If this thing isn't settled soon, get ready for Boeing to be downgraded to junk on their bonds. Today's special, $10 Indians, where all of the fractional gold has just taken off. But the $10 Indians, they're in a good spot here. 1 through 9, 1465. That's $15 less than a $10 Liberty. If you buy 10 or more, $14.50, $30 less than a $10 Liberty. I know that we ran some the other day and we had them a little less. I don't think it was $30 less. Jason, rarely do we see this happen where the Indians are cheaper than the Liberties, but take advantage of it. What a great opportunity getting some of this fractional gold put away. And, I'm thinking about, when Jason, when you first started, 20s were less than this, weren't they?
Yeah, what's the price today again? What's that price?
$14.65, 10 or more, $14.50.
Yeah, it's this is where we're at for sure. We're gonna be talking about how a $20 Liberty back in those days are going to be cheaper than a $5 Indian or a $5 Liberty. But absolutely, you're right on this one. People look at that and when they hear it, it's like, well, why should I buy that today? It's just too expensive. Joe, we have to go look at how many days have we set record high this year, starting in back in February, March. We have almost as many record high days as we have days that weren't record highs. There's 365 days in the year. Why do I get the feeling we're going to have about 150 record high days this year? It's nice to say because for so many years you had that 2011 high that we just couldn't get back to. Well, now here it is. And it's not. There's not going to be some gigantic pullback that's going to last 15 years this time. That's not happening.
Yeah, well, the thing has changed, hasn't it? There was no de-dollarization going on. The deficits were so much more affordable, right? Every rating agent gets off their hind tail here will have downgraded the U.S. debt since then. And so you're starting to put all of these things starting to play out here against the dollar. We wondered how much debt was going to be too much, right? People worried. Let's face it. A lot of people thought, oh my God, $5 trillion, that's going to be too much. $10 trillion is going to be too much. That turned out not to be too much. But what we're learning now, as we're approaching $35.5 trillion, right? We're going to be at $37 trillion, right next to $37 trillion come December. Apparently that's become too much, and it just seems like the more the debt gets out of control, the more weaponization comes into play. And today now we're saying, hey, all of a sudden there's 159 people wanting to participate in the new BRICS payment system. We learned a lot this week about what's coming out. I guess the last big thing is if it's going to be 40% gold and 60% BRICS currency, look out. All bets are off after that point, because now you're not talking about, forget about 3,000, 4,000. Right now you got to really, I hate to say it, but you really got to start talking about 10,000. That's what you got to talk about if that's what they really want to do.
Well, and if everything was in balance in this market, the actual dollars in circulation in this country, gold would be 12,000. Dollars to gold. That's actually where it should be. If and markets they don't act exactly that way, but still. It's a lot different than where we at 26.60 today. You have a lot of room to run inside of there, Joe, especially if the de-dollarization we just talked about last segment, dollars coming back home, printing that has to be put into circulation to keep things floating, to keep the government spending. You could easily double the price of gold, and it'll start to catch up to that actual ratio. I mean, silver to dollar, silver should be $1,556 an ounce.
Oh my gosh.
If you actually did dollars versus ounces. So I don't think we're going there. I think a modern economy is more balanced than that. It doesn't exactly work that way, but we know that gold and silver is not where it should be. It just hasn't been, Joe. I think it was running. Here's the thing: in 2011, I think it was running there. I think it was going there, right, Joe? And then the Fed secretly printed $29 trillion and gave it to all their banks and countries that were in distress, which is pretty much everybody, and everyone just put it in place to solidify their emergency. And that's why we didn't have the massive inflation back in those years, because it was just to solidify empty coffers. Well, Joe, now it's coffers aren't quite as empty as they were back then. Not everyone's bought into mortgage-backed securities in the wrong way, right? There's not quite as much corruption. So what's going to happen? Well, more money, and gold and silver will start pushing upwards for all the factors we mentioned today and more.
Patriot Radio News Hour, final segment coming up. 800-951-0592. The big special today, $10 Indians, 1 through 9, $14.65. 10 or more, $14.50. $10 libs right now, $14.80. So, Jason, a great opportunity to get some $10 Indians for less than $10 Liberties. And that doesn't happen very often. You always have those bigger premiums on the Liberties. Gold, once again, at an all-time record high here, 2,660. Silver hanging tight. Silver had such a huge day yesterday. It's only off 20 cents, 31.85. But a very strong showing for silver. The Dow down 220 points. Again, we get two big numbers tomorrow. Jobless claims. I don't know. They've been so low. We'll see if we get this tick up. Anything, 230 plus. I think they're going to view that very bullishly for bigger rate cuts. And then, of course, the inflation number, right? Anything below 2.5%, they're going to jump up and down. And a core number of 3% or less, I think they're going to jump up and down. And Jason, I think very possible. We've talked about this. You can't be surprised if it goes that way. 2,700 could fall this week.
When gold went up on Friday, and then it went up a little bit there on Monday and Tuesday. This is what's happening this year. It seems like when gold goes up on Friday, and then as well on Monday, it's been jumping to the next $100 platform. So we're not that far away, are we, Joe? All we have is Thursday and Friday. We could wake up Friday morning with 2,700 gold very easily. It's been happening a lot this year.
Yeah, and these price, eventually we'll get a pullback eventually. But at these premiums, it really doesn't matter. 800-951-0592, and we'll wait for tomorrow. I don't know. I got to throw this out there. Did you see the college quarterback from UNLV? UNLV, they're 3-0. I mean, they're right outside, I think, the top 25. Their starting quarterback quit the team. Quit the team yesterday, said, hey, you guys aren't honoring the NIL money you promised me.
Oh, no.
I'm going to quit the team. I'm going to redshirt, so next year I'll go somewhere else and get paid the money. It's crazy, right? This is the kind of – I'm wondering, sooner or later, right? Can you imagine, like I don't know, half of a college football team quits in the middle of the week because whoever offered them the NIL says, oh, wait, just kidding, I didn't have the money?
I hate the way football has been going the last bunch of decades. They've made the quarterback position so valuable that now you have monetized college football. And, of course, the quarterbacks now are going to be holdouts. I'm holding out for the bigger contract.
Right.
Because I don't know how much. It's not. I don't know how huge the money is. I know from what I understand, it doesn't seem like it's huge money yet, but it's big enough that hey, you better have a good quarterback or you don't win in your division in college football, Joe. So it sounds like he has an agent. I'll bet he has an agent now. I'm sure.
Oh yeah, all these guys got agents. Listen, there's a guy, the backup quarterback at Alabama, is suing Florida State. Because he signed with Florida State because they promised him like $13 million, and then they said, just kidding. Yeah, I mean,
$13 million for a college quarterback. Uh-oh.
Right?
Uh-oh.
Well, that ended up not happening, but still, how far away are we? Yeah, you don't think we got an inflation problem? 800-951-0592. Jason and I, we're coming right back with the F15.